What is up, YouTube? Welcome back to another video. In this video, I'll be going over Wednesday, February 25th's price action. If you guys are enjoying the videos, please like and subscribe. It means a lot to me. But yeah, let's just get right into the higher time frame and start out with the draw of liquidity and bias. So going into today, I had a short bias temporarily, honestly, but it was basically conditional as I just want to be reactionary to the price action. So we were kind of sitting here. We were more sitting here. Oh no, we weren't sitting right here. We were sitting, all right, I guess that won't work. But basically we were at market open. We swept out this buy side liquidity and we had a 1 hour fair value gap below and a 4 hour fair value gap below, as well as low resistance liquidity. So overall, my overall bias was bullish. However, since we swept out this buy side liquidity sitting inside of a 4 hour, I could see my short-term bias and my current draw of liquidity being bearish as a rebalance to these to then continue higher. So that's why the overall bias was conditional and reactionary. But yeah, that's basically all I needed to know for the higher time frames. And this is the 1 hour as well. So there's that 1 hour fair value gap, buy side liquidity that we swept right near market open, and then the 4 hour fair value gap, and then all this low resistance liquidity right here. So it's basically how are we going to react off this buy side. And if we were going to flip these 4 hours and 1 hours, then I would obviously be bullish towards these two buy side liquidity levels here. And if we were to respect this buy side, I would be short towards rebalancing this 1 hour and 4 hour, if that makes sense. All right, so as you can obviously see here, this is market open. I did take this one trade that I'll talk about, but basically right at market open, we only displaced higher, hitting the 4 hour and the 1 hour fair value gap that I was talking about. So this is a 4 hour. I believe it was also a 1 hour. Yeah, so it was a 4 hour and a 1 hour. So now like getting my conditions, I was noticing that we were only displacing higher, and we did hit this 4 hour and 1 hour, and there was a potential short play out of this 30-second. But I mean, basically the reason I didn't take this was all of this displacement higher just for a 30-second max short down to the liquidity below doesn't really make sense logically. But I did want to quick talk about that. I just have only one trade to mainly talk about for today. So I have a 5-minute chart pulled up now. So just quickly noticing all the displacement higher, and then around right before 10 o'clock and at 10 o'clock, we've inversed this 4 hour bearish gap and also this 4 hour bearish gap, which was a lot of displacement and just confirming bullish bias for me towards this buy side liquidity and this buy side liquidity. So around 10 o'clock and right before 10 o'clock, I now had a bullish bias. And going back to the 5-minute time frame, we had this 15-minute fair value gap and this 15-minute fair value gap. So go to the 15-minute. Here's that for 15-minute bullish and this 15-minute bullish. And then I'll show you ES. ES had this 15-minute bullish at 9:45, and that's the same 15-minute bullish at 9:45 right here. So basically, I just took a continuation setup. As you can see, price retraced to this 15-minute, retraced deeper, not quite hitting this 15-minute, but it was hit on MES or ES, I guess. And so that was the reason I kind of still took this trade. It was a 15-minute retracement, 5-minute highest time frame inversion with nice displacement on these two candles. And it looked like it had good V-shaped recovery, but let's get into the lessons for this one because obviously it lost right here. So obviously on ES, going to the 15-minute chart, here's that same 15-minute bullish fair value gap. And obviously we retraced pretty deeply into it. And so on MNQ, there's that same 15-minute. If I can drag this out. There's that same 15-minute. So we mitigated it on MES, but not on MNQ. So I wasn't too worried about this level being hit on NQ as ES already took it. But I feel like this has happened to me before. The fact that ES took it and NQ didn't, SMTs at fair value gaps when I'm taking continuations, probably have to backtest it unless anyone can comment down below, which would be really nice. SMTs at fair value gaps and like kind of including that to make your trade seem valid, if that's probable or not. In my experience, I think I can say that SMTs at fair value gaps don't work as often as if just the asset you're trading goes to that fair value gap, if that makes sense. So anyways, I had this 15-minute fair value gap marked up on NQ, but ES hit it, so I wasn't worried about NQ having to hit it, if that makes sense. And so basically this was just the continuation model. 5-minute was the highest time frame and it lost. So that was lesson number 1 of why I think this trade setup could have failed. Point number 2 that I didn't realize live during trading this. So obviously I took my trade on the 5-minute. Right here is where my stop loss was. I just put it at the low break even right here, targeting this 4-hour buy side liquidity. Pretty obvious liquidity right here. And I think it did make sense if we wanted to go up there. It was NASDAQ moving 264 points, which isn't unreasonable. So I did have my target up there. But point number 2 of what I was saying for this trade was I didn't realize I had a 30-minute unmitigated fair value gap below. If I did realize it, I'm still a little confused because it looks like we have retraced, ES retraced way deeper, hitting this 15-minute. So it looks like the retracement has already been done, and then we are getting the V-shaped recovery out of it. So even with the 30-minute being there, not too sure, probably have to back test it again if that's like a valid setup or a probable setup. If you guys know, comment down below. That was point number 2. And then let me see if I had any other things. Oh, and then I additionally put that my 5-minute entry was relatively premium live. I obviously recognize that, but the fact that ES retrace deeper, I thought would like kind of even that out, if that makes sense. I don't know if that makes sense, guys, but that's basically what I was thinking. And then psychology and emotion was good today, got good night's sleep, and I just let my trade, I stepped away from the charts, letting my trade do what it was going to do. So I was going to execute it correctly. So I didn't mess with that. But yeah, those like the 2 main lessons for this one, I guess. So yeah, to sum it up, basically, the reasons I think this one failed was SMTs at fair value gaps were continuations, kind of sketchy. I probably need more data on that. And then reason number 2, which I didn't realize, was the 30-minute fair value gap bullish at my stop loss when I took the trade. I was expecting a 10 a.m. open low high close, which we did open low, and we'll see if we high and close, but I didn't realize that there was that 30-minute unmitigated fair value gap at my stop. And also, if I did realize it, what is a good point, or what is a good takeaway is, what is a good takeaway? Did we already retrace and this V-shaped recovery is valid, or do we need to mitigate that 30-minute? Lots of back testing to do, probably lots of yeah, just reviewing my journal maybe as well. But that was the one trade I took. I am off the charts after that. This trade was, I was also in it for a very long time. After I got in it, I was just like, bro, just either go break even and then, or just stop me out because this is ridiculous. So also weird accumulation after this move, but it wasn't like a crazy 500 point pump. So I didn't think we would accumulate this much. I thought we would continue higher. But yeah, guys, that's the reality of this. Those are all the lessons I took away from this. Comment down below if you took the same trade, or comment down below, more preferably, if you guys have any tips for exactly about what I just said about the 30-minute and then the SMTs at continuations. Yeah, I appreciate you guys for watching. Very good day, very interesting day. Taught me a lot. What was this one? I just noticed I had, oh yeah, this 30-second was here. I didn't really love it, but it hit the 5 minutes. So if this 30-second had better displacement, I would have taken it 5 minute, but I just didn't really like the displacement. Anyways, yeah, guys, I appreciate you for watching the video. Thanks for tuning in to the live, real, raw day of what trading looks like. So yeah, I'll see you guys for the next video. Sorry for my rambling a little bit, but yeah, I'll see you guys for the next video. And yeah, peace. Boing, 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 boing.